Welcome, guys. Yet another day to this beautiful episode, and today I'm going to be talking about leverage trading. Okay, I'm going to be talking about how we can possibly maximize these leverage tools that the DeFi and the crypto space had to offer us, because we are in the bear market right now, and if you look closely, a lot of people are just looking for ways that they can secure the funds that they have or multiply it, okay, instead of just holding some altcoins in your wallet and you just see their value going down. So today I'm going to be talking about how you can yield farm with low risks and with a higher potential upsides. Yes. All right, guys. And without any further ado or any order of list, I'm going to be introducing to us Notional. And let me share my screen so that we know about what I'm going to be talking about leverage vaults. So guys, so far I've been on the DeFi space for a very long time, and I've seen a lot of farm protocol, farming websites, farming sites, staking and all that. But there is something unique I found about Notional. So we're going to be talking about Notional right now. So introducing leveraged vaults. Yeah, introducing leverage vaults. After many months of work, we are excited to formally announce the next leap forward the Notional and for all of DeFi lending, leverage vaults. Okay, so today they say let's dive deeper a bit into leverage vaults. Leverage vaults, thank you, man. Leverage vaults allow users to borrow cash at a fixed rate from Notional and deposit it into a whitelisted smart contract that is executing a specific yield strategy. Now, this specific yield strategy, that's what we're going to be talking about. What's the innovation? There's an innovation around this specific strategy. All the assets in the smart contract act as liquidatable collateral. That means they can be liquidated. All the collaterals in the smart contracts, they are liquidatable, okay, for their debts, allowing users to get highly leveraged exposure to the strategy if the strategy returns exceeds the interest rate to borrow. Using leverage vault will be highly profitable. So guys, don't let all this confuse you. We are going to be using more diagrams to explain this further so that you get a full picture of what we're talking about. But before we continue, let me explain further. Leverage vaults increased capital efficiency for user without forcing lenders to take any kind of credit, okay, or uncollateralized risk. Lenders are protected with the same time tested principle of over collateralization and liquidation. If the value of the assets in the smart contract declines below the minimum threshold, user can be liquidated and their debt will be repaid. So this is this is very open because this Notional, they are actually using the balancer pool, which we're going to be seeing in a diagram that explains it further and show you how this minimum threshold, when you get to this minimum threshold, a user can be liquidated and their debts will be repaid. Okay, for example, let's walk through this. To use a leverage vault, a user will need to bring some amount of initial capital, okay? Select a debt maturity and leverage ratio, and then execute the transaction. Notional will then borrow from the corresponding liquidity pool on behalf of the user and deposit the borrowed capital along with the user's initial capital into the vault, okay? So now, let's say you bring in, let's say, $10,000 into the pool, okay? And you want to borrow, let's say, another, let's say, $60,000, adding to that your $10,000, making it $7,000, okay? So as for you to provide liquidity on another yield protocol, okay, that is going to give you a return, a certain percentage or APR or APY on your yield. Okay, so what Notional does is that when you deposit this your 10K, let's assume you deposit the 10K into your Notional account, okay, you now have the ability to be able to borrow, let's say up to, let's say 60,000 with that your $10,000, okay, inside the liquidity pool. So that 60,000 with your 10,000, making $70,000. You are not just going to withdraw it, okay? You are borrowing it for the sake of leverage trading, okay? So you are now going to provide liquidity on another pool, which is going to give you yield. And after the expiration date of that liquidity you provided, you know, the borrower will be paid back. You know, the money that you, okay, let me explain further so that with the diagram, so that you don't get confused. All right, guys. So let's take a look at an example using the balancer/Aura boosted stablecoin LP strategy. Okay, in this strategy, USDC is placed into the balancer boosted pool. The LP tokens are then staked in Aura, and the incentives are periodically harvested and reinvested. Okay, and invested. To initiate the position, the user brings 10K. Okay, this is an example where the user brings in 10K, 10,000 USD dollars, initial capital to Notional. Okay, this is where you're bringing the money to Notional. The user then borrows $700,000. Okay, from Notional at a 4% fixed rate, for 3 months, and deposit a total of 800K USDT. Okay, that means your $100,000 initial capital plus the $700,000 you borrowed from Notional into the vault. You get? So now you are going to put in your 10K into Notional, borrow 700K. You are going to put your 100K into Notional, borrow 700K from Notional's vault liquidity pool, okay, and then you deposit it into the balancer vault. So let's look at this, guys. So let's say now you are the user here. You borrow you bring in 100,000 USDC and deposited it into Notional. And once you deposit it into Notional, there is an initiate a borrow of at 4% APY. Okay, you're going to get a 4% APY because you borrowed so much. You all your liquidity, you borrowed everything. Okay, and you deposited your 100K plus this 700K you borrowed from this liquidity pool. Okay, this is you brought in 100K and into this liquidity pool, and from this liquidity pool you now borrowed 700K, and you, as you borrow 700K, now you, from Notional, there is a vault. You deposit both your 100K and your 700K into the vault, and that vault will take it into the balancer pool, okay, where the aggregator or whatever they do there on the balancer pool, you know, the yield farming on different high asset class, you know, trading on different, you know, what they call different kind of tradings, you know, leverage tradings on these pools. All right, so let's read further. So now this is going to remain here for like 30 days. When you deposit the 800K into this vault, the vault will now take it into the balancer pool, which is going to in return give you 8% APY. If it is going to be giving you an 8% APY, that is initiate borrow at 4% APY. You are going to pay back 4% from whatever capital, whatever gain you made. You're going to pay 4% back to the liquidity pool. So now this pool now is giving you 8%. That means you're going to keep 4% for yourself. So let's buttress further. let's buttress further, guys. All right. Let me refresh the page. All right. So over the 3 months term, the vault earns an average of 8% APY, turning 800K into 816K. Okay, guys. So at maturity, the user pays off the debt plus interest on notional 707K. This is the interest, that 4% APY that that was initiated on your borrowed capital. All right. All right. So, and keeps the remaining 109. Now, this 9 is now your gain, okay? Now, 109. Remember, you brought in 100K into the system, and now you are living with 109K. You are living with 109K. Okay, that is some gains. Okay, with low risk, with a very low risk. The more you are you borrow from the notional pool, that is the higher your, there could be risks also in doing all these things, and getting liquidated and stuff like this. So the lesser your borrowed rates, okay, if you are borrowing 10x of your capital or 100x of your capital, the lesser you borrow and put into the vault, the lesser your risks, in getting liquidated and stuff like that. So because either way, if you get liquidated anyway, the pool, you are still going to return the $700,000 which you borrowed is still going to go back to the pool. All right. So there's a very minimal risk here. So this nets the user a 36% APY on their 100K USDC over the 3 months terms. So you can see in 3 months time, they have increased their capital to $109, $109,000. Okay. So now, if you don't get this, let me explain further. Look at now, you are having if you want to redo the whole thing, compound your gains. Okay, let's say now you now have 109K USDC which you have withdrawn, and you realized 36% APY from your initial capital. Now you are the user, you withdraw your 109 USDC, and the liquidity is being paid with capital also. Sorry, with interest. You are paying back the liquidity. Remember, you borrowed 700K, and now you are paying 707K. Automatically, all this happens by itself, by a smart contract, because once you get this your 100K inside here, you can borrow this 700K here. You can borrow this 700K here, and you already know with a 4% APY that initiates on the borrowed amounts. All right. So whatever you are getting out of here, you're going to be paying a 4%, back to the liquidity pool. So the vault user is able to earn outsized return on their USDC by taking advantage of the fact that Notional's borrow rate is lower than the rate they have earned on the strategy. So guys, you see why the strategy works. But the strategy involves risk. The user can also lose money if the strategy fails to return enough to cover the interest rates they have paid on their debt. The more leverage the user takes on the greater their potential size and the downsides. So guys, this is very interesting. The more leverage you take, that means the higher your potential of making profit, and also the higher your potentials of making losses. But you have a very high borrowing percentage. Let's say you bring in 10K, automatically you could borrow up to 70K from the system. So the 70K, you're not going to have the 70K immediately, knowing that 70K, you're using it to put into another system, another vault that is going to send it into the balancer aggregator, into the balancer liquidity pool, and the balancer does all it does best and gives you a 8% APY returns. Okay. So if you are borrowing from Notional, let's say you bring in a 10K capital, make sure at least you try not to max out your borrowing leverage, okay? So as you don't get liquidated real fast, and you also be in the game. All right, guys. So benefits of leverage vaults for Notional user. What are the benefits? You may be asking yourself, okay, leverage vaults will change the dynamics of Notional lending markets and improve returns for all Notional users. Yeah, not just the users who directly use the vaults. For sure, guys, lenders will get access to higher interest rates due to the increased borrowing demand, okay, driven by the leverage vault users. So, guys, liquidity provider will earn more fees from the increased usage. Yeah, the protocol will earn more revenue from transaction fees and reduce its dependency on liquidity incentives, because organic profitability for LPs will increase. So Notional, they got this, okay, guys. So go live. Notional is targeting an October launch and will go live with an initial set of 3 leverage vaults that have high sustainable return, guys. These vaults have high sustainable return with low risks. These are the initial strategy balancer. Okay, let me share my screen so that you see exactly what I'm talking about. Let me share my screen. So, guys, they have 3 vaults which you are going to that offer high sustainable returns with low risks, and which one is the balancer / Aura WST8 and 8 LP strategy. Okay, this is the first strategy. User will borrow 8 from Notional to deposit into a strategy that puts the 8 into the balancer, okay, 8 WST8 pool. All right, stakes the LP tokens on Aura and periodically harvest the incentives. This is the first strategy. Okay, so it's going to borrow ETH from Notional. You borrow some ETH from Notional, put it into the balancer / WST ETH pool, and you stake the LP tokens on Aura. You go to Aura and stake it, and periodically you're going to be harvesting some incentives. Okay. You can use your max leverage, your maximum leverage, which is 10x. You understand? You can use maximum leverage, which is you can make it 8x, 7x, 2x, depending on your risk tolerance. Another strategy is the balancer / Aura boosted stablecoin LP strategy. User will borrow DAI / USD from Notional to deposit into a strategy that puts the DAI / USDC into the balancer boosted stablecoin pool, stakes the LP token on Aura, and periodically harvest the incentives. It's just the same thing, but this had to do with USD, sorry, stable coins. You know, DAI and USDC are stable coins, and Ethereum is not a stable coin. So this is the second strategy. And another strategy which they're going to be using, which is the F cash spread strategies. All right. User will borrow DAI USDC to deposit into a strategy that swaps it to USDC DAI and lend the USDC DAI on Notional at the same maturity to take advantage of rate differentials in the same maturity between 2 different stable coins. Max leverage you can use. I think this one has more leverage. Max leverage is 20x. All right. I may not be using this F cash. I think I prefer these 2 strategies, especially this balancer Aurora boosted stablecoin, because you're dealing with stable coins, and stable coins it's very hard before you see a stable coins drop in value. So $1 is being pegged to $1. So the feature of leverage vaults, okay, leverage vaults are a paradigm shift in DeFi lending that will revolutionize the industry. These vaults will improve capital efficiency in the crypto native economy and offer lenders the opportunity to earn attractive fixed rate return without compromising on trustlessness, transparency, or counterparty risk. Okay, guys, we could not be more excited about the upcoming launch of Leverage Vault at all, guys, at all. And we will continue to push DeFi forward and build toward a decentralized and efficient financial system for the crypto native economy. So, guys, what are you waiting for? Let's go further and see some graphical. Okay, this is so far the vault, the balancer. This is the balancer WST8 vault strategy, and so far from the inception, which was on the 6th of this year, on the June, that's June, you know, Notional started their stable return for strategy return breakdown. Okay, for balancer. All right, WST8 and Wrapped8 strategy. This is the first one. Now this is the second one. Where is that of the USDC? Okay, this is for the okay. This is just explaining the balancer for the 8 and Wrap8 pool. So guys, counter balancer where's okay, fees 1% APR. Okay, current balancer. Okay, all right. So guys, do yourself some good and check this out, especially if you're a big money player and you want to minimize risk with your portfolio while waiting for the bull run to start. You can we still have like some few months for the bull run to kickstart. So guys, for you to be on the safer side and still earn money, you can actually use Notional, you know, to maximize profit on your portfolio, on your stable coins or on your Ethereum. Yeah, so I'm going to be doing that with my little bag, but with time, I believe my bag is going to get bigger. So guys, make sure to hit that like button, subscribe. If you like the video, if you like the content, we're going to be bringing more content like this from time to time. So guys, cheers, and I'll see you in the next video. I hope this video was able to give you some value, all right? Was able to dispense some value to you guys. So make sure to drop your comments. Every link I'm going to be dropping on the description. And also, guys, I'll see you on the next video. Cheers.